Can you hear me to start with? Yes, can you all hear me? All right. Good afternoon, good morning, good evening. How you doing, everybody? I hope all is well. I just want somebody to confirm that they can hear me first. Okay. So after that, we will carry on. Good stuff, good stuff, good stuff, good stuff, good stuff. Good stuff. Let's test all the sounds. Let's test the sound, make sure the sound is working. Sound is perfect. I hope you can hear me. So if you can, just confirm. Let me check with my sound engineer to make sure that all is working perfectly. Okay, thank you. Sound is clear. All right. Thank you very much for confirmation. Good stuff. So, good evening, good afternoon, good morning, good afternoon, good day, everywhere you are. Yes. So today we are gonna, as usual, we're gonna go on and talk about trading. And before we do, we wait for other people to join. But in the interim, I'm going to tell you a little bit about myself. Okay. So it's important to know who is talking to you and what is my background. Okay. So my name is Dare. You know me from YouTube. I got introduced by a friend who trades stocks over 20 years ago. So needless to say that I jumped straight into Forex trading. I did a very, very little demo trading and opened my first live account with a broker that is consistently requoting me. Needless to say that I follow my first account, which I opened, I blow it within 4 weeks. 4 weeks, I blow the account, because I was using a strategy that I found on the internet. That strategy seems to be working, during the time I did a short testing, but afterwards, it blew my account away. So I put it on the live environment and it didn't work. So instead, my account went. Okay, good. What do I do next? Well, having blown the first account, I was then contacted by a company and they promised they can trade my account for me. They said, yeah, give us your money. We will trade it for you. I said, okay, good. Let me try them. So I opened an account. They have a broker and asked me to deposit into their broker's account. So I did. In fact, a day after I deposited, they called me again and said, hey, that money is not enough because you are going to make a lot. Can you put more money? So I said, okay. Well, since they can do good trading, let me try. So I put more money, huge money. Okay. And well, I will tell you that it took less than 4 weeks to blow my account. These professional traders, as they said, because in my own case, when I did trade myself, they were faster to blow the account. So I then decided that, look, if I'm going to trade at all, I have to do it by myself this time. I don't want anyone to blow my account for me, because if I do myself, at least I will learn from the mistake and I will learn something from my experience. Okay, so I then go ahead and make another mistake. So this time around, I got introduced to the world of robot trading, Forex EA, expert advisor, as they call them. So I find them very nice. I got 2 of them. They look very genuine that they can do the work. In fact, I paid close to $1,000 for them. So instead of the EA to actually compound and build my account, actually they blow it 3rd time. So now I nearly gave up. I nearly gave up. So at this point, I'm left with 2 options. Is that I quit altogether or I find an answer. So I choose to find a solution. So what I did was I set myself a challenge to build a strategy that works. And if I succeed in become successful, I will stick to that strategy. Otherwise, that is it. Bye-bye. End of the day. But to achieve that strategy, to achieve my objective, I found myself a true mentor. So this mentor developed an indicator. At the time, he has an indicator which turned out to be the honest and accurate indicator I have seen. as at that time. So having learned how to use this indicator, I then built my first strategy, homemade strategy based on this indicator. So having finished with that, I then open my own account again. That's the fourth one. So I open another account. But this time, I am deploying the strategy I just built based on my market understanding and the risk management. So I apply a good risk management to it. Well, the resilience paid off. My persistency paid off because my strategy produced a good result in the first month of live trading. So there I understand how to build a strategy, and I have then since gone on to build several winning strategies for myself and for my students. So having coached hundreds, if not thousands of students, I realized that the limitations to them being profitable is not about strategy only, but lack of adequate mentorship. What happened to me? Hence, this Your Trade Mentor was established to build an army of 1 million successful traders. And we're on our way to achieving that goal. So I hope you follow my story. That is my story. You want to know who is talking with you. So that's my journey so far. I have built several winning strategies. So my students use some of my strategy, and they have gone to build their own strategies as well. And today, I am going to talk to you about one of those winning strategy. So I call that winning strategy double MACD. Okay, you must have heard of double MACD before. So, but before we get into that, let's discuss what is MACD itself. So, moving average convergent divergence is a trend following momentum indicator that shows the relationship between two moving averages. All it does is show relationship between two moving averages of a security price. So a price of gold, a price of euro dollar, a price of any security, any instrument, when you compare the moving averages together, two moving averages together. So the MACD is calculated by subtracting the 26 period from the 12 period moving average. It could be 26 and 12, it could be 13 and 5, it could be any combination. But when you do combine the two moving averages together and find their difference, we call it MACD, moving average, convergence, and divergence. Cool. So having told you now, discuss with you about what the MACD is, now we are going to go on to now describe it. Okay. So we're going to go on and describe it. So in this lesson, we're going to go through what the MACD is. We're going to look at how we can construct the indicator to trade. We are going to look at 4 different type of entry signal. The first one is called a trend. The second one is a re-entry. The third one is a counter trend. And the fourth one is divergence signals. Okay, it can be bullish or bearish, but they are both divergence signal. So without further ado, let's go. So I've told you what is MACD, you know it already. So this is how it will look if you look at it from a picture point of view. It will have histograms, like lines like this. It's called the histogram. It also have what is called a MACD line itself. So it's like a moving average that moves around. And the third thing that you will notice there is you will have a middle line. We call it a zero line. That's MACD. Okay, so now we are going to apply 2 MACDs on our strategy. The first one is the big MACD. So we use the settings 12, 26, and 1 for this big MACD. Okay. So what you need to notice is that when price is above, when MACD is above 0, yeah, we say we are in an uptrend. When MACD is below 0 line, we say we are in a downtrend. You can use the word negative for downtrend and positive for uptrend. So remember, we have the 0 line. Also notice that we use white to denote the color. We use white as a color for the big MACD, 12, 26, 1. So we're going to use the second MACD also. The difference is the settings. Instead of 12:36:1, the second MACD is a shorter MACD or smaller MACD. So this time around, it's going to be yellow color, and the settings will be 5:15:1. Okay, nearly half of the previous setting. Okay, the previous was 12:26:1. This one is 5:15:1. Similar stuff. When MACD is above 0, we say we are uptrend. When MACD is below 0, we say we are downtrend. Look at the 0 line also is here. And you use the word positive when it's uptrend and negative MACD when it's downtrend. When it's downtrend, you say it's negative. When it's uptrend, you say it's positive. Cool. Now, we've seen the two settings we are going to use, and now we are going to combine the two together. We have seen them separately. Now we're going to combine the two together, and here it is. So we now combine the two MACD together, the small MACD and the big MACD. We combine the two together, the big and the small MACD. Okay, so let me check for some of the thing that we're doing. Probably that you cannot see my face, you cannot see my screen. Can you not see my screen? Okay, anybody? Oh, can you not see my screen? My screen is on, right? Let me see. My screen should be on. Okay, I understand what is going on now. Okay. I see. Okay, let's do this way. Let's do this way. Okay, ladies and gentlemen, we sort out the problem. Oh, you want to see my face? Big face, right? Okay. My face is back. Hey guys, my face is inside now. Let's see the screen instead. Oh my goodness. Demi, what's going on today? Did you just turned my face into a big screen? Yeah. You make my face big. All right. Yeah. All right, guys. Okay, all right. We haven't gone far. Okay. So you heard what I said. Okay. It's nice to have fun. I'm having fun all the time, you know. Thank you. Looking great, right? Actually, I wanted you to see me properly. That's why I did that first. So it was part of the strategy. It was part of this. It wasn't a mistake. Was it a mistake? No, it was part of the strategy. Good stuff. Okay, so this is where we came. This is where we started with, right? So we said we're going to look at this list, and perfect. So, and afterward, I went here to show you the histogram. You had me, now you can see it, right? You look at the histogram, you look at the MACD lines, and then you look at the 0 line. That's what I said. If you are following me, that's how I know who is following me. So if you are following what I'm saying, you see that. Then we went to compare the two MACDs. We said we have two MACDs. One is a big one. So we talk about the uptrend when it's above 0, the downtrend when it's below 0. You see, technology sometimes, you know, you got to understand the technical part of it. Maybe I understand the fundamental, but the technical, I'm gonna grab it. Don't worry. Computer jargons, I am for it. No, maybe next time it will be done by a robot. Okay, maybe robot will do all this stuff for us. We don't have to move anything. We don't even have to use a mouse. The robot will do all this stuff for us. Okay, so we talk about the second MACD. We said we're using 5:15:1 for the settings. When MACD is above 0, we say it's uptrend. When it's below 0, we say it is downtrend. Okay. All right. And then I think this is where we are. Before my sound engineer actually gave us a very good indication that we are not going anywhere. We are still on the station. Even the train was sounding woo, woo, like it's going somewhere, but it hasn't moved yet. So now we are back. Now we want to move now. Okay. So when you combine the two together, you got this 2 MACD interposing or interjecting or relating or on top of each other. So you see the smaller MACD is on top of the big MACD. The white one is the big MACD, 1236, and the yellow one is the small MACD, which is 5151. Okay. Notice that they both have their 2 separate lines. Okay. When we go to look at it on the chart, you see that these 2 separate lines is always there. Okay, so now you've seen the 2 MACDs, how we build them and how we put them on top of each other. So what we need to see next is what are the signals we can build from these 2 MACD. So I said initially we have to build 4 signals. 4 signals. One is a trend. Second signal is a counter trend. The third signal is the first signal is a trend. The second signal is re-entry. The third is the counter signal, and the fourth one is the divergence. So we are going to go to the first one, which is the trend. Okay, trend. Remember, trend. So this is a trend. Okay, trend. One word. MACD crosses 0 line. That is all about trend. So I told you about 0 line. Where MACD crosses 0 line, that is this trend signal. Okay. So look at all the time that MACD crosses this line, this 0 line here, you get a signal generation. You get one signal, either to buy or to sell. When MACD crosses above the 0, you buy. When MACD crosses below the 0, you sell. Okay, but which of the MACD are we looking at? Because now we got 2 MACDs. Which of them are we saying when it crosses 0? We're saying if the smaller MACD, the yellow one, crosses 0, you get a signal generated for you. Like here, it crosses 0 down, that's a sell signal. Here, it also crosses 0 down, sell signal. Another crosses 0 down, sell signal. But this time, it crosses 0 up, that's a buy signal. Here, look at here. Don't worry about this line. This here, it crosses 0 here. That's a buy signal. So you got few buy and sell signals when MACD crosses 0 line. Yellow MACD, small MACD, that's what we are talking about. Okay. Can this strategy be used in crypto trading? Yes, it can. Actually, if you go on the YouTube, you will see that I've practiced it on Bitcoin on a lower time frame, which work like a trade. So it can be used. And if you are using TradingView as your charting application or platform, yes, it also work on that. Hello, Joel. Long time, Joel. How you doing? Okay, so the first one we said is trend. So don't forget, trend is crosses above 0 or crosses below 0 line. That's it, trend. Okay, so we all got that. Now we are going to talk about the second one, which is called the re-entry. Why do we say re-entry? The first one was trend. The second one was going to be re-entry. Okay, it means that when you want to re-enter something, you must have been there first, and that's correct. You are already in a trade, or the signal is already on, and you want to come back and re-enter that same signal. Okay, more like adding to your open positions, right? That is it. That is the second method or second signal we are going to look into. And this is how it will look. So the second one is called the re-entry. So watch out, what is the difference? You remember the first one was crossing 0 line. Okay, so here is crossing 0 line, the first method. That's the absolute first method, crossing 0 line. Okay, so that is the first method we mentioned, the first signal. But now let's talk about the second one, which is re-entry. So now that you are in the market, our market is in your favor, price is going your direction, and you're wondering, oh, I've got this trade going on. Can I actually take part in this trade again? Can I enter this trade? Where should I get into this trade? It's an uptrend. I don't know when to get into it. So that is where re-entry signal comes into play. So it gives you the opportunity to go and re-enter that trend that is already going on. Okay, so what will happen is you will see that your white MACD is always above zero line, but the yellow MACD, which is your signal actually, which is the MACD that you use to generate your signal, drop below zero line and rise above zero line again, while the big MACD is constantly above zero. So that is what is called the entry signal. So that is when you have to go back and enter that trade again. So this is the first entry from our first signal, but to re-enter, the small MACD dip below zero and back again and rejoin the trend. So there you buy second time here, making it a re-entry signal. Okay, so there could be a sell re-entry signal or a buy re-entry signal. Okay, I hope you got that. Yes. Okay, so very simple. So we have talked about two signals. One is a entry, the initial entry, which is cross zero line. The second is once you are in the first trade, then you want to re-enter that trade. It's called the re-entry signal when you wait for just the smaller MACD to cross below and above again for a buy. If it's a sell, the smaller MACD will cross above and cross down again. That is going to be for a sell. We will see that as well. So that is the two we have looked at. Now we got to look at the third one. The third, number 3. Okay. Number 3, you got to look at number 3. And what is it? Number 3 is called the counter trend. Okay, counter trend. The difference between the first two and the third one is basically the first two we have mentioned are in the direction of the trend. Okay, you can see when MACD crosses zero, you buy. That's in the direction of the trend. Then when small MACD dip below zero and crosses above zero again, you buy. That's also in direction of the trend. It's a bullish direction, and the two trades are buy and buy. Now we're going to inspect the third signal type. Is counter trend. That means when things are going, when MACD is above zero, we want to be selling. When MACD is under zero, we want to be buying. So we want to do something against the trend. So be careful when you do that always. As you know, the old adage, one of the oldest adage in trading general says, trend is your friend. So that means don't go against the trend. But I will show you how to do that if you want to use that counter trend strategy. That's the number 3. Okay, so this is the third one, counter trend strategy. Okay, so counter trend strategy is also very simple. Okay, so counter trend strategy happens when the smaller and the bigger MACD crosses each other, and usually they will cross each other above zero line or below zero line. So when they cross each other above zero line, that is a counter trend to sell. When they cross each other below zero line, that's a counter trend to buy. When they cross each other above zero line, counter trend to sell. Below zero line, counter trend to buy. Above zero line, counter trend to sell. Why do we say it's a counter trend? Because you see, both MACD basically are above zero here, which means they are uptrend. But we are saying we are selling. Okay. Look, it's a very sharp place to sell, which is good. But be careful, as you can see, the original direction, which is the original trend, actually continue. So it happens to be that this counter trend is a short-lived trend. It means you cannot stay long selling this stuff. So you have to sell it very quick and out before you get carried away with a stronger trend. So that's why you need to always be on the side of the trend. Even if you made a mistake, the trend will carry you to the station. You carry you to your next station. You are not fighting against the current flow. You are in the flow. Okay. So similarly here, you can see we are in a downtrend because both MACD have crossed zero line down, but you are buying because the two of them crosses each other. So similarly here, you are selling at this point. So look at counter trend as if you are looking at an oscillator, like a stochastic oscillator. So, overbought, oversold regions, when it's above 80 or when it's 80 line, you sell. When it's below 20 line, when it's 20 lines, you buy. So something similar, this is what it's giving you. So it's giving you a counter trend trades. Okay, so we've talked about three. We talk about the trend, number one. We talk about the re-entry, and the third one, we talk about the counter trend. Last one, but not the least, we're going to talk about when we have differences between the signal, between the charts and the indicator. Okay, that's what we call divergence. So divergence means that the price action is telling us a different story to what the indicator is telling us. Usually both of them should agree, and 90% of the time they agree. If MACD is going up, price is going up. If MACD is going down, price is going down. But sometimes, sorry guys, so sometimes they do opposite. When price is going up, MACD will be going down. So I'm going to switch this off. Thank you, guys. So when MACD is going up, let's look at it. This one here. Look at these two prices, okay? These 2 points. You see, this current point is higher than the previous point. So you expect MACD to show the same thing, right? That is uptrend, okay? But MACD is not showing that. It's showing the opposite. The current point of MACD is lower than the previous. That's what it's called divergence. So there's a dichotomy. Is that dichotomy? Is that a biological word or what? Or a geography word? Somebody who's a professor of grammar. All right. So dichotomy. That's a difference. Okay. I don't know whether it's correct or it's not correct. So I'm using it. Okay. So now you can see there is a move from this previous high to the next high, which is higher high, but this is lower high, higher high, lower high. That's divergence. And if you can recognize that, this MACD strategy will give you opportunity as well. It's more like a double confirmation. So you can see once you get a divergence and you recognize it, you let MACD crosses the line, and you can just allow 2 candlesticks after that, and you take your trade. It means that you have actually confirmed that this is a genuine divergence, because sometimes there could be a fake divergence, many fake divergence. You will see a difference in price action to the MACD indicator, but price continues to rise. It continues to go up and up and up, even after it says there's a divergence. So, but with this, when you see the divergence and also MACD is crossing below zero, it shows double confirmation. Excellent. Now, we have looked at bearish. Now let's look at bullish. It's the same thing. Okay, bullish divergence. So bullish divergence is similar to the one we talk about. When we see the current low is lower than the previous one, right? This is called a lower low. But you can see here, the current low is higher than the previous low. That is higher low. You see lower lows, but here is a higher low. So it means there is a divergence. Divergence between what the price action is telling us and what the indicator is telling us. It's difficult to find this divergence. Don't think it's so easy to find them. It's pretty hard to find them. You can scroll to your chart, you will see they all go in sync all the time, but you can spot them with a sharp eye. Not everybody can spot them, but some people can spot them. I can spot them. I think Demi can spot them. Who else can spot them? Joel can spot them. Celestine should be able to spot them. I think T Topsy should spot them. Demi should spot them. You should spot them. But the good news is that even if you don't want to spot them, there are different indicators. They call them MACD divergence. In fact, it is on our web page. If you want to download it, we have it that we recognize all these divergences for you. And once it indicates a divergence and then the price went to cross, MACD went to cross the zero line, that is a confirmation that yes, it's a true divergence. However, you got a divergence and MACD is not making move, then you might think that is a fake divergence. You don't need to worry about it very, very much. So we have such an indicator, and I'm sure you have seen different indicators in the market to trade, and you've seen a lot of mentors that teaches you how to trade. One of the things that we do is to make sure we give you the right tool. As you listen to my story, I didn't get to become profitable until I saw somebody who taught me very well, who actually showed me the right way to go. So now I want to give you the summary of what we have said so far. Okay, this is just the summary. I'm not going to repeat it. It's just a summary. But what I haven't mentioned is your take profit target. Okay, so for the first signal type, which is a trend, we are going to use 20 to 40 pips as our TP. 20 pips means if you use 1 hour chart. 40 pips means if you use a 4-hour chart. For the second type of signal, which is the re-entry, we are going to use same thing, 20 for 1 hour, 40 for 4 hours. By the way, if you want to go lower to 15 minutes or 5 minutes, it is very, very possible. Therefore, your take profit will reduce. For example, on the 15 minutes, it could be 10 pips. On the 5 minutes, it could be 5 pips. Okay. Meanwhile, for counter trend, you remember that counter trend? Counter trend trade. That is the one that you want to swim against the current. You want to swim against the sea. You want to try and force your way. In that case, be careful because you must use a very small pips. You must target very small pips so that you can get in and get out fast. So for a 1 hour chart, you only target 10 pips. And for a 4-hour chart, you only target 20 pips. So for the divergences, you target the same amount as the other two. Okay, 20 for 1 hour and 40 for the 4-hour chart. So, and the long trade is exactly the same thing. Okay, the same number of pips. So if you know that, you can apply a strategy like this consistently with good money management, and you can become profitable. Who will like that? Who will like somebody to show them how to do this? Everybody makes mistake. You can sometimes make some silly mistake, but you got somebody to correct you and bring you back and say, hey, these are the areas that you need to improve on. And that's what is called mentorship. Mentorship is about guiding, it's about helping other people, and it's about making sure people get better and better and better. And the thing is, it is very easy, as a forex trader, to be profitable for 1 week and 2 weeks. But what about for the next 6 months, 1 year? Can you still hold that account? And that is what your trade mentor is going to do for you. We're going to make sure that you are very, very consistent making money and trading profitably. So I will go now to show you practicals of what we have done on paper. All right, so we've done it on paper. Now we need to do it practically. Practically. Okay, so let me delete this one because I think I was showing before. Okay, so this is it. I hope you guys can see my screen. This is what we have been talking about theoretically. Now we want to do it practically. So I think most of you can do it this way, but if you can't, let me do like this. I'm going to briefly show you how to construct it. So let me open a new chart, file, new chart, open Euro USD or anyone. So open Euro USD, look for MACD, which is actually here. You drop the MACD on the chart. The first one you want to do is the big MACD, which is 12.26. Oh, if I can type correctly, 26. And the color we want is a white color. White. Okay, let's just say copy white, and the color here is also white. And on the level, we want to make sure that that level also is white. Okay, 12.26, 1. Remember, ordinary MACD, when you add it, it always have 5 year, but we change it from 5 to 1. So don't make that mistake. If it's 5, change it to 1. If it's 5, it will give you 2 lines, but we don't want to see 2 lines. We want to see one single line. Okay, there we go. So that is the first MACD. Let me expand it so that it looks like what we'll be looking at. So it looks like that. And let me make sure we also have a candlestick. So now we've done the first one. The second one, but the second one, you have to do it specially. Remember, it's on top of each other. Otherwise, if I just say, do it like this, drop it here, it will go separate. Okay, I'll do it for you. You see what I mean? So let me do the second one. 5.15. 1, right? That is the second MACD, which is the short one, or the smaller MACD. This time around, we are not going to use white. We are going to use yellow color, as we said. Okay, yellow color for the 3 colors we want to, 3 places we want to put it. Okay, so we have yellow color, and then the parameter is 5.15.1. Remember, I just put it on the chart. See what happened. So 2 of them, we don't want to see 2 of them differently. No. So that's why when you want to do the second one, you have to do it specially. Otherwise, this is what you are going to get, and it's not going to help you. So I'm going to delete it, second one, and I'm going to do it properly this time. So this time I'm going to drag it on top of the previous one. That's the only way you can do it, to make sure they stay on top of each other. So I drop it this time. Everything still stays the same. I've already put the color. I've already put the parameters there. Now I say, okay, it should stay on top of this one now. Oh, yeah. So that's the difference. If you do it that way, it stays on top. But if you just add it to chart, or you right click it and say add to chart, it will stay in a separate window. Okay, so this is what it will look like. You can see 2 separate lines. One is for the big MACD. The second is for the smaller MACD. Who can recognize this signal here? Okay, me, I can recognize this signal here. Okay, let's look at it. Let's look at that first. Okay, so let's look at the first one. We call this is called crossing below 0 here, right? This is crossing below 0. That's the first entry. Okay, but here, that's the first entry sell. But you can see here, the white MACD is still below 0. It never crosses above 0. It's still below 0. But the small MACD went above and crosses back below 0. So that is a re-entry, which is, let me put it right place. That is when it crosses back below 0 line. So you have your first sell signal here, and you have your re-entry signal here, re-entry. Can someone spot a counter trend trade? Yes, I can spot a counter trend trade here. So this is a counter trend trade. It's here. Let me show you counter trend trade. Counter trend trade, we say when the two of them crosses together. Yeah, the crosses together here. That is to tell you to buy. But it's against the trend. You can see that was a little bit of retracement or up movement or little uptrend, but it didn't last because it fell again. So if you are going to do a counter trend, as we said earlier, you got to be quick and move on and quickly take your 5, 2, 3, 4, 5 pips and run. Okay, so let me take that off. Okay, so that is the counter trend. All right. So this is we're looking at a 1 hour chart. So that's a sell example. Let's look at a buy example. I could stop anywhere and just look for a buy example. Okay. Okay, let me stop here and look for the buy example here. So here you see MACD crosses here above 0. Remember, it has to cross the 0 line. All you need to watch is that the big MACD is pointing in the right direction, in the same direction. But your signal is generated when small MACD crosses a 0 line. So this is a buy signal here. Okay. Now you guys can see what this one nearly give us a re-entry, but it didn't because it never dipped below its own 0 line. If this yellow had dipped a little bit below its 0 line, we will say we get a re-entry signal here, but it never below its 0 line. So it's still one trade, one buy trade. As you can see here, you have different counter trades here, counter trades, but we don't really look at that counter trade. Okay. This is sell signal here. Okay. Okay, let me see. Okay, that's a buy signal over there. This is a buy signal here. I'm trying to see if we can see a counter trade. We can see a re-entry. Okay, let's see. Do we see any re-entry here? Any re-entry? There could be many that I am passing through them. I am passing through them. So this can be used on any time frame. And okay, because sometimes it gives you a very good counter trend, but not always very you don't get there consistently. So you need to have something consistent. You can see all these trend signals are consistent. Trend signals are very consistent. Okay, so for example, this one is a re-entry signal. You can see you have a sell trade that happened. You have a sell trade that happened here, and you got the yellow MACD crosses above 0 and back again. That's a re-entry. Okay, that's the one I was looking for. You can see the yellow MACD crosses above 0 and back again, while the white MACD remain below 0. So that's the first sell. That's the re-entry to sell. Okay, good stuff. I hope you guys are getting this right. So we can drop down to lower time frame. Let's say on this time frame 1 hour, let's go higher first. Let's go to 4-hour time frame, and I want to see whether we can make our 40 pips target. Let's change currency pair to anything. Let's change to this one. All right, so let's stay where we are. Okay, so let's say we have a buy signal here. When it crosses, okay, so we are looking for, this is 4 hours, we are looking for 40 pips. Let's see if we get 40 pips. This is 100 and 150 pips. So even this bar is already giving us nearly 80 pips, double of what we are looking for. So definitely you'll be able to get all your TPs if you want to leave the trade very quickly. Here is a sell. If you just follow all this signal, that's a sell signal. Let's see from here whether you get your 40 pips. This is 67, 70 pips. Definitely you get your 40 pips. Next signal is a buy. Let's see if you get your 40 pips. That is 70, 77. You got it. Let's go again. Sell signal. Did we have our 40 pips? Way more than 40 pips. This is what? 170. Okay, the next one is a buy signal. Do we have 40 pips? We have 150. Next one is a sell signal. This one might not give us all our pips. Let's see. Did we get 40? Yes, we did. In fact, we got up to what? 80 pips, and we're looking for 40. Okay, so I'm just going through the chart just like that. Here we have a buy cross here. On this occasion, you are not going to you're not going to make your 40 pips yet. But remember, when you enter a position, your stop loss will be below the previous swing low. In a buy, when you have a buy position, will be here. So even if you enter a buy at this junction here, you buy over here, right? You put your stop loss below here, yeah, below this previous low. Your stop loss is still intact. So this trade will turn out to be a good trade later on. So let's see. You bought here because your MACD crosses, and you bought around here, and you're looking for 40 pips. You see, you get it is 100 pips. So far, we haven't seen a losing trade. Okay, here is a sell. This is probably going to be our first one that's going to be losing trade. So this one is a sell when it crosses here, and you put your stop loss over here. So you can see, I don't think we can get 40 pips from here. No, not up to 40 pips. So this might be a losing trade after like 5 or 6. The next one is a buy when it crosses 0, and you are looking for 40 pips. Did we get 40 pips? We definitely get way more than 40 pips. That is 300 and something. Okay, you got that. Next one is a sell, crosses 0 line here. You're looking for 40 pips. Did we get 40 pips? Way more than that. We get more than 40 pips. So the next one is a look, this is a re-entry, right? Because you can see, if you look at it very well, you see the yellow crosses briefly is 0 line and crosses down again. So here it crosses up and down again. That's another sell. So when you sell here, you put your stop loss above here. Okay, you can see you make your 40 pips. That's already 80 pips there. Okay, so that is how we work this strategy. It is very, very simple. So we have this strategy and many more other strategy that we apply. So if you have any question about this strategy, let me know. But you know what? We hold hands. I mean, we can hold your hand to show you how to manage your trade. One of the best way to be successful in Forex is to realize that consistency is the key. Not just trade for one day or for 1 week, being successful, but you want to trade for many days, right? So I'm going to show you what we can do for you. Okay, so I've told you about the strategy already, but I've brought to you something special that I want to help you with, especially some of you that you need help to choose a mentor. If you find it that you want to choose me or my team as your mentor, this is what I can offer you. Okay, I can offer you a complete tutorial video, which is worth $1,000. This is one of my special bonus offers. Okay, I will offer you recorded videos that you can watch to improve your trading. I will give you 3 trading strategies. It was over $2,500 US. Those 3 trading strategies doesn't mean that that's all the strategy you use. If none of those 3 meet your criteria, then I will find another one for you. Everyone has a strategy that works for them, and not one strategy works for all. That is it. Not one strategy works for all, but you can find a lot of people with different strategies that work for them. So if you want to download premium indicators, we have them on our website. It's worth over $1,000. We deal with fundamental and technical trade as well. We do analysis constantly on our forum. Those are the special bonuses I will give you if you want to be part of my mentorship program. On YouTube, if you look at our videos on YouTube, I've talked about mentorship long time ago. So it is now time to help you out. Okay, this is to help, all right? Now, I've told you about the special bonus, but now I'll tell you about more bonuses, okay? So you're going to have access to members only forum. We use Discord forum. We do live trade review sessions on a daily basis. Okay. We send trade signal recommendations in case you don't want to actually trade, you just want to take the signals. Yes, we have them. We give you signal. You know, some signal provider charges $50, $100, $200 a month, but it's part of what you are going to gain from us. Well, we analyze high impact news. We release new videos roughly every week, and you have access to the expert advisor page and indicators, as I said before, and live trading room. So this live trading room is something that is very, very interesting for our members. They go there and discuss trades. Okay, so all these things I've shown you here, all this, if you put them together, I reckon they are over $7,000. Okay, put them all together. So for this $7,000, I want you to open your checkbook and write me $7,000 check. 7K, 7 grand. All right, don't write me any check. Okay. For all those things I've mentioned so far, I've created 3 packages for you. I named them silver, gold, and diamond. Not because I'm a jeweler, yeah. It's just because I wanted to make it so simple and easy to understand. So I've packaged them in 3 spots. One is silver, gold, and diamond. Okay, let me show you. So simple, 3 things: silver, gold, and diamond. So everything we have discussed about bonus, about special bonus, all those videos, all those 3 strategies, live session, fundamental, technical trading, all those things, trading room, they are included in your silver package. Okay. And it's $50 US only. Instead of $7,000 US, not 7,000, you pay 50. Gold package is the same as silver package. All those $7,000 worth of activities is also in the gold package, but it includes 1-day mentorship. That is one-on-one chat with me, one-on-one discussion with me. I'm going to talk to you on Zoom. I'm going to see if you want to show me your previous result, your trade ideas, what you have done. Just like my mentor did help me, I'm also going to help you. So for 1 day, I think we're going to have a 2-hour session. So I will propose to you, having listened to where you are coming from, your experience so far, I will propose to you a strategy. And you can go ahead and implement that strategy with the money management, and you can come back to me and 1 or 2 things to clarify. The diamond package is exactly the same as silver and gold with all those $7,000 worth of activities, but it includes a 3 days mentorship. This one is only 1 day, which is just 2 hours for 1 day. However, if you want a deep dive into strategies, money management, into how to become consistently profitable, it might take more than 1 sessions to do that, depending on your level. If you are someone really wants to get very deep, 3 days will be ideal for you, and it will be 2 hours a day, so 6 hours altogether. You can stagger the time, the days. It could be 5 days in 3 days in a row. It could be staggered in a week apart. It could be a month apart. It depends on your availability. But I'm always available. I will open up my calendar. You will see my online calendar. You can book whenever you want to have your training. So, based on this 3 package, which one is of interest to you? If you don't mind, you can type it here if you are interested in silver, gold, or diamond. So this is what we have been showing to our students. Some of our students are on this diamond, some are on gold, some on silver. So tell me now, which one do you want? Which one do you want to take part in? Okay. While you are telling me that, let me add that if you don't have to pay anything for these 3 packages. So I just say, okay, I really want to help you and you are not going to pay me. Type there which package will you choose, diamond, gold, or silver, if you are not going to pay anything for it. Remember, these are worth over 7,000 US dollars, and we have crushed the price to something similar. To be honest with you, what you are paying for is actually my time to discuss and to hold your hand and to chat with you. That's all you're paying for. Otherwise, all the training is only 50 USD. Okay. But even the 50 USD, the 200 USD, and the 500 USD, if you are not going to pay it at all, zero, nada, which of them will you prefer? Okay. Which of them will you prefer? Type your answer in the box, because I want to show you something that you don't even have to pay for it, because we have a partnership with one of the biggest brokers in the world, Blueberry Markets. Blueberry Market are based in Australia, and they have one of the tightest spread. You can withdraw your money at any time. You can deposit with different ways, and they recognize what we are doing, that we want to help traders to become successful, and they said they will partner with us. So if, for example, you want to become a mentee with us, you want us to mentor you, and Blueberry has agreed to sponsor you. So remember the 50, the 200, and the 500 USD. Instead of you coming up with those training fee, Blueberry is going to pay for you. They will bring out that money and pay us so that you can be mentored by us. You can become successful trader. So they said to us, you will register with them, but depending on what amount you put in your own account will determine which package you are entitled to. So remember, when you open a broker, you have to fund your account. So if you fund your account with 200 USD, right, you are entitled to silver package. If you fund your account with 500 USD, you are entitled to gold package. If you fund your account with 1,200 USD, you are entitled to diamond package. You just come back to us and say, yes, I've registered. Come and train me now. We have no choice. We have no choice than to train you up, than to mentor you, to hold your hand until you become successful. You will be in a group. You'll be learning every day. So, and also we need you to put all your energy, all your effort, focus on it, because we can't just do it without your own cooperation. So if you cooperate with us, you do all the stuff that we ask you to do, and you put your time and effort, you will see reward. Okay, so this is the promise they said, and we have seen that they have fulfilled their promise with all those people that actually have signed up to them. Okay, so if you want to test them out to make sure that instead of you paying me to teach you, you don't pay me, let Blueberry Market pay me instead. Okay, if you want to do that, I'll show you what to do. Okay, what you need to do is to get to this link here. You click that link. I hope it's the right one. Yes, you click that link and it will take you to a web page. It will take you to a web page. I hope you can see the link, right? Confirm if you can see the link. It takes you to a web page, and that web page will look like here. So I'm going to bring the web page. It will look like what you are looking on the screen, actually. Let me show you. It will look exactly what you are looking on the screen. Yeah. So it will take you to this web page, right? But this time around, you can click it and register. Okay. It's exactly. So that is the web page. If I click here, you see it will reload itself. Okay, so you get there and put your user, you put your first name, last name, email address, and click. You can see, click create an account. Once you've done that, usually, it takes them very short period of time to respond back to you, and you provide all the ID documents, whatever, because they are regulated brokers, so they need to take your ID and follow the procedures. So once you do that, we will get information from them that Kate has just registered, or Joel has just registered, or Celestine has just registered. And once we get that information, then you can contact us straight away. There are a lot of different ways you can contact us, but the best way to get to us, if you have been with us for a while, you know the best way to get to us. If you are not yet a member, is through what? Who knows? What's the best way to get to me or to get to the team? Is through Telegram. It's through Telegram. So you can click the Telegram and it will bring you straight to our group, our team. So Telegram is a free group which you can join at any time. Okay. I hope you can see the link. Okay. I hope you can see the link for Telegram and the link for the Blueberry Market. So if you get the two links, let me know. If it's not showing, let me know as well. I will make sure it shows on your end. All right. So this is the broker that will, if you fund your account with this amount here, 200, you will entitle to silver package. That's about $7,000. If you fund your account with 500, you will entitle to gold package, which is 7,000 plus 1 day mentorship. If you fund the account with 1,200 USD, you get access to diamond package, which is $7,000 plus 3 days mentorship. Okay. So I think last thing I'm going to show you, let me show you about Blueberry Market. So if I click here, okay, let me say open a new tab. It should take you to the Blueberry website, and I'll just show you a few things about them and know a little bit about them, because before you trade with a broker, make sure they are genuine broker. You can get your money, you can withdraw your money, know that you trade and they will be playing pranks, playing games with you. Remember my story. My first broker were playing pranks and games with me. When I make a trade, and I say I want to buy or sell a particular currency pair, they requote me consistently. And by the time I click, a pop-up will show up and say, hey, the price has changed. The new price is blah, blah, blah. Click yes. When I click yes, by the time I see my trade, it's about 5 pips away or 10 pips away from what I saw on the screen. So my goodness. So all my strategy that I tested, they don't work. All right. So This is the Blue Market website. You know, one of the good things about a good broker is their spread. You can see they have a good spread, 0.1 on Euro USD. Sometimes you go to 0. That's how you know some good broker. They have a very great review on all these 3 platforms. 5 star, or that's 4.5, nearly 5. They got a big number of traders on their platform. What else do they have? They have a very good support system. You can chat them up. You can ask them questions. Some brokers don't even have a support. They don't have a live support. Well, the good thing also is that you can do deposit and withdrawal very easily. You can see all the means you can withdraw, or you can pay into your account. Actually, you can also pay in through crypto, because I know a lot of you guys are into crypto now. I'm into crypto as well. And not just you guys, I'm into crypto as well. And also, loads of instruments to trade with: Forex, shares, crypto, commodities, indices. Anything you want to trade, you got it. Okay. Very simple to apply, get verified, and start trading with them. The last thing I will show you is their regulation, because I told you, don't trade with any broker who is not regulated in a proper jurisdiction. So these guys are regulated by the Australian Security and what is that? An Investment Commission. ASIC. Okay, they call them ASIC. Australian Security and Investment Commission. So they are properly regulated. Okay. So thank you so much, everybody that has joined tonight. It's been wonderful. I really enjoy it, and I hope you learn 1 or 2 things from what we have discussed. If you have further questions, I think I've shown you the way to contact us. The best way is to go through Telegram. From Telegram, you can reach out to us. So Telegram is very easy. You just either you just ask a question in the group, or you just search for YTM. That's me. Search for YTM, and then you ask me direct questions, and I will answer those questions. Okay, thank you so much. You've been great and good tonight. For everybody that's attended, I hope you benefit 1 or 2 things. So without further ado, I want you to give me a like before you go. On this video, you can give us a like button. Just click the like button, and it shows that you really appreciate what we are doing, and I appreciate you as well. So thank you so much, and until the next time, make sure you subscribe and click the notification bell so that you can get updates anytime that we send an update of the next meeting, of the next live streaming. So you get it right in your inbox. So click notification bell and make sure you subscribe. Thank you.